You could be starving your business of cash as we speak. Cash you need to pay your bills, pay your team, and help you sleep at night. But your P&L is looking spectacular. Your balance sheet is looking solid. So you should be happy about that, right? Wrong! There's a fatal flaw which awaits you on your balance sheet, but not where you expect it, down in the murk and weeds of liabilities, where all the debt and loans live. But it's up in the sunny, happy place, in your assets. That fatal flaw is a bloated, disgusting, stagnant accounts receivable. That's all the money owed to you by your clients that's just sitting there. And if you don't take action and do something about it, your entire world can come crashing down, and fast. Whether you're a multi-million-dollar corporation or a solopreneur, you need to manage your accounts receivable. You can do this. We'll start with a quick overview of accounts receivable. Then I'll show you how to analyze accounts receivable. Then I'll show you how to improve your processes around accounts receivable. And lastly, some strategies to clear unpaid invoices. Let's get started. The three main reports used by business owners to run their business is the profit and loss, the balance sheet, and the cash flow statement. Today we're going to be focusing on a line in the balance sheet. The three main areas of the balance sheet are the assets, the liabilities, and equity. The assets are divided into short-term assets, or what they call current assets, and long-term assets. Current assets is anything your business can convert into cash quickly, usually within 12 months. Short-term current assets are usually made up of cash in your bank account, inventory, expenses you've paid in advance, and what we're going to talk about today, which is the accounts receivable. Accounts receivable is just the total of all the money owed to you by people who have bought your stuff, whether that's a product or a service. You've sent your clients the bill, but they haven't paid you yet. Now, when a client pays a bill that you've sent them, it moves out of accounts receivable and into cash at bank, cash in the bank. Therefore, the name of the game is to move that money out of accounts receivable and into your bank as quickly as possible to optimize your cash flow. The basic process that's the same no matter how big or small your company is that you sell something, goods or services, and then raise or create an invoice, send the invoice, and then get paid. And each point along the way requires communication with your finance professionals to make sure they've got the right information to make this all flow smoothly. It's easier and quicker for you to log in and have a poke around to see what's happening with your accounts receivable. Log into your software. Today I'm using Xero, and this is the demonstration company, the demo company for Xero, which means that all the data you see today is just sample data. You're looking for the aged receivables report. In Xero, come up to accounting, then go to reports. And on the reports screen, go up to the search bar here and just type in aged receivables. And then you want the aged receivables detail, so just click on that. And here's the report. Don't forget you can change the date that you want. There's a lot of flexibility here. And click update if you make any changes. Let's have a look here. Very few of these invoices have been paid on time. Most of them are at least 1 month overdue. And as we scroll down, we'll see that there's this one here this enormous sale that hasn't been paid, and it's very old indeed. To have a closer look, right mouse click on the figure that you want to find out about and just open in a new tab. Here's the details of this particular invoice, and this is one I've set up because I like to have examples that really stand out. So we've got a nice $10 million sale here that's very, very overdue. Now, before you get too hot under the collar, it's a good idea to make sure the bank has been reconciled, because here we have quite a large and very late invoice for $6,187.50 from Ridgeway University. But of course, if you go back to the dashboard and then into the unreconciled bank transactions, you can see that it's sitting here. It has been paid, but it hasn't been marked off. So that's something to talk to your bookkeeper or accountant about. What are the triggers that cause the invoice to be raised? Is it when you reach a milestone in a project? Is it in the terms of a contract? Is it in billable hours from your work in progress? Once one of those triggers goes off, what are the blockages to the invoice being raised and sent? Does it have to wait until your bookkeeper comes in once a fortnight? If so, can someone else learn how to do the invoices? Can your team in the field use an app so they can bill the client directly once they finish a job? Invoicing should always come first. It should be the first task a bookkeeper or accountant does before any other accounting task. First, let's look at the format of the invoice itself so that it makes it as easy as possible for your clients to pay. Here's what you need to do. Go into your accounting software and email yourself a copy of one and check the following. Make sure that the total amount to pay is clear. Make sure the payment options that you offer are clear. For example, direct deposit, PayPal, Stripe, Go Cardless, credit card, etc. Make sure your company's correct email and contact details are on the invoice. And your terms of trade. Make sure the due date of the payment is correct. If you are invoicing under a contract, make sure the due date on the invoice matches the requirements of the contract. Client details. Make sure your client details email address is going to the correct people. If you sense a disconnect between their accounts department and whoever has authorised the payment, include both people on the invoice. And check to make sure your client doesn't require a purchase order number on the invoice. Clear out the existing junk. Check that the invoice has actually been sent. Here's how. Xero shows when the invoice has been viewed, when they've clicked the online link to the invoice. Here's how to automate reminders that are sent out to your clients. And here's how to automate the statements. Allocate time to sit down and blitz through the list of late payers. If you hate doing it, write yourself a little script and then just sit down with the list and blitz through it. Get the accounts payable department on the phone of your client. Half the time they haven't even received the invoice, so it's easy to just resend. Getting your accountant or bookkeeper to do this step is really good. They have a bond with their compatriot on the other side, and it's less emotional, more professional. So use the notes field in Xero. Paper trail is important for documentation. Here's where reminders and statements are important, because if you're going to take legal action, you'll need that. Letters of demand, etc. Some clients can be extremely frustrating. Manage your stress. It is enraging that you are the one losing sleep and not them. I'm not a fan of discounts for early payment or penalties for late payment. It usually doesn't work anyway. Decide if credit checks are appropriate for your business and then put in place at the appropriate point in the sales and billing process. Even if everything is flowing and working smoothly, you can turn it into a bit of a game with targets and challenges to get that cash from your clients and into your bank account. I hope you found today's video useful. If you have any questions, please leave them down in the comments. I'll see you next time.